Hello everyone, hope you're all doing fantastically well. I'm Ian, the Dividend Chief, and this is my March 2026 portfolio update. I'll try and keep this as quick and to the point as possible because at the end of the day, my portfolio won't mean as much to you as your own. But what I can do is show you real numbers, real progress, and exactly how my strategy is playing out over time. As always, this is a real money dividend portfolio, fully transparent and no hype. In this update, I'll walk you through performance, portfolio value, ETF allocation, dividends received this month, and how the 2026 income projection is shaping up. As always, none of my videos are giving out any sort of financial advice. They are simply here for educational purposes and tracking my investment journey. So let's start with the overall portfolio. The portfolio value now sits at £5,811. This was recorded on the 31st of March 2026. And the total investment is £5,725. That puts me at this moment in time at an unrealised gain of £86 or 1.5% overall. Yield on cost is currently sitting at 0.81%, and I've received £40.27 in dividends so far this year. So steady progress, nothing flashy, just consistent growth and income building month by month. Here is a simple view of how the portfolio is tracking. You can see the gap is starting to form between what I've invested and the actual portfolio value. Over time, the obvious aim is to get that gap as wide as possible. I'm now sitting at an £86 profit or unrealised profit, which is encouraging given how the market has performed over the last 4 to 5 weeks. However, the focus here isn't about short-term gains. It's consistency and letting compounding do the job. Now, looking at the month-to-month performance, February was a very strong month. I was currently up at around £415, 8.4%. March has pulled back quite significantly. It is now showing a profit of £86, which is 1.7%. That's a drop between February and March of around £329 or 6.7% compared to February. Investments don't just go up. There will be tough periods. That's part of it. I feel it's very important to show the bad months as well as the good, because that will give a true reflection of an investment journey. It's my belief that the key thing is to stay consistent and focusing on the long term, because zooming out, we're still moving forward overall. Here is how my portfolio is currently allocated. Everything is very close to target, which is exactly what I want to see. The only exception really is the IUKD. Like I said, I'm no financial advisor. I would assume that's to do with the interest rates because it's obviously ISAs involved in property. It's hence why I've given it the lowest weight in my allocation, because in my opinion, it's likely to fluctuate a lot more than the others. So I don't want massive risk. All have dropped considerably since February. The best performance or performing ISA, did I just really say ISA? Sorry, I meant ETF, is the IEMD, which went up or is showing a 5.31% increase in terms of its weight to target. But obviously they've all dropped, like I said, in March compared to February. But I'm not too concerned, and like I've said on previous videos, unless there's a 5% swing in terms of the weight and target, I'm going to let it run and I'm not going to change anything. I'm confident over 5-10 years that these ETFs are the correct ones for me. However, if change is needed in 6 months, 12 months, etc., then I won't hesitate to do that either. Now, on to the monthly dividend breakdown. This is the income from dividends I've received in March 2026. As you can see, the total is £19.41, which is the most I've had this year. Obviously in a single month. The biggest payer was the SEDY of £8.10. This is exactly what I'm trying to build. Multiple income streams coming in consistently. Looking at the year so far, the greens are obviously what have been received January and February and March. £40.27 overall. The projected is now standing at 266.68. And that is where it starts to get interesting, because each month adds momentum, because I will be investing £200 per week of fresh capital, and any dividends I receive will be ploughed straight back in and invested into the ETFs. Or should I say reinvested into the ETFs. Overall, this will show that income is building month by month. So, to wrap things up, the portfolio is in profit, income is growing month by month, the allocation is on track, and the dividend snowball is starting to build. March wasn't as strong as February in terms of growth, but income increased, and that's the priority. This is a long-term dividend strategy, consistency over hype. If you're building your own portfolio, stay patient, stay consistent, and focus on income as well as growth. Thanks very much for watching, and I'll see you in the April update. All the very best. Cheers.